No, no, it's not. That's a structural change. It never should have been at the levels. Will financials go up? Is the private credit situation going to reverse and go back? No, it's not. Well, that's a big chunk of the market. I did not expect Bitcoin to come back below 100,000. The S&P 500, I think that's just making a mistake.
Bitcoin?
That will be at all-time highs.
All-time highs by midterms.
Yes. I think Bitcoin will again be the fastest horse of the race. And I think at that point, it's going to bring a lot of new people.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Submission is coming to the reality that you don't know when this is going to end, but you know something has changed. And for me, I live in a world, and the market does too, it doesn't get recognized this way. And for people that are watching that are just at home investors, when you hear the word regime shift, that is a structural change in a complex system. The market is a complex system. It involves credit, it involves interest rates, it involves inflation, it involves economic growth, stagflation, productivity, whatever you want. I think for the first time, institutions in this last week have finally come to the conclusion, and maybe it's because I've been negative now for a period of time and just saying, I think this is going to be a very challenging year. And in particular, I think it's going to be a very difficult year for covariance matrix, the relationships that have existed for a long time between bonds and stocks, bonds and inflation, inflation and oil, and all these different things. Well, we're at that point now where the damage is going on. And at some point, and I wrote a paper on this for 22V, that when in the first Rocky, he's the underdog, but then he knocks out Apollo Creed in the first round. He didn't win the fight, but that set that it was going to be a long fight. And I think that's what submission is. I think this was the week that people realized that this isn't going away like it did last year in two parts. One is, again, the market's not throwing up. It's just kind of going through this deleveraging phase where everyone's raising cash, but they're getting rid of their market neutral positions and they're gradually taking things down. And two, this isn't going away quickly in terms of oil prices. This will be the fourth week in a row where we're closing above $90 and everyone's done with taco. Everyone's had enough of, they know the drill. Friday, I threatened to do X. Monday comes before the open. You know what? We're going to extend it for 5 days. We're going to extend it for 2 weeks. I think people now are focused on the probabilities of boots on the ground and the probabilities of when is the straight going to open. And none of those at this point are looking like good outcomes. Well, the straight is the realization from people that they've now done their homework and they realize that even if magically it was open, it's still going to take a long time to get back to where it was, where it could considered to be truly open. It just means that the shortages that we're starting to see around the world, they're going to be here. And these are real shortages. This is COVID-like problems. And I think this is the scarier thing to me is most people knew us because they don't feel it and they don't see it. I mean, they're out of diesel and gas in places like Australia and places like New Zealand. Now, not completely, but there's websites that show how many days left of inventory they have. When China put up the ban on exports of refined products, this was weeks ago. That was a warning sign, and everyone inside the energy market knew that, oh my gosh, I mean, the Chinese have their own intel, and they're saying we're not exporting anything anymore. We're hunkering down to take care of our own country. Plastic, polyethylene, through the roof, hasn't come back down. Jet fuel prices, massive. You're starting to see airlines raise prices. In the US, they're only talking 20%. In Asia, Cathay Pacific last night, 37%. Like the inflation thing is real because the shortages are going to take some time to get through. And it isn't just the strait. There was a lot of damage done to the infrastructure, particularly things that, like I mentioned last week with Ras Laffan in Qatar. This has implications for LNG, but it also has implications for helium. And so helium, there's enough inventory for semiconductors in Asia, but that's starting to get more alarming. And you're starting to get examples of something Jeff Curry said on all of his interviews, which is when countries start worrying about their own situation, and this is what happened during COVID with the masks, they start hoarding things. They start building inventory because even if the strait were to open, what's to say there won't be a drone that hits a tank if all of a sudden tanker, if something goes backwards. And we've learned now that the strait shuts down if one thing happens. Nobody's going through there if all of a sudden hostilities start to increase again. So I think there's a very, very difficult situation that the market's coming to terms with, that this is more structural than they thought. The market's building in that for this year,
It's halfway.
go up. Yeah. And I mean, short rates have gone up. We have Fed hikes starting to be built in. I would be very surprised if we don't see inflation headline CPI above 5. I'll put it as better than 40% chance that we're above 5 this year. We're certainly
This year, 2026.
Oh yeah. Well, by the time we get to the middle of May and we get the report for April, we will have headline inflation above 4. Not even a question. That will happen, certainly. And the reason is because gas at the pump, plastic prices, airline price, all of that stuff's going higher. Fertilizer prices, you're going to see food go higher. And that's all going to happen short term. The import price inflation we just got for February. Now, I say February because
It's not even before, or not
oil
even after,
prices
yeah.
were $63 or $66 for that month. It was up 1.2% for the month. So now, again, most of that was from electronics. What people forget is DRAM prices are up 400%. Like, there's other components, all the peripherals and technology, all that optical fiber. This country imports a lot. So the AI side has increased the goods side. And believe it or not, remember how much the tariffs were being eaten to some degree and it never filtered through? This is just the nature of what companies do. If their input prices are now going through the roof and they didn't pass them through before, part of that was because their productivity numbers were good. If they start seeing consumption drop off, it wouldn't be surprising to see them err on the side of moving things higher. That's what caused a lot of the problems back in COVID, is this mentality of moving higher. So we will see it at a higher level. And that's, again, why I don't see a chance of the market having a sustainable bottom where you can move out of this and actually start to go higher until we have a peak in year-over-year inflation. Every day that passes, I think it's more likely that that's going to happen towards September, not towards April, even if things ended in the straight, because I think the filtering through of all of these other prices are going to happen very, very soon.
Yeah. Doubling of inflation this year, I think, would shock people. And to your point about this market submission, it would catch a lot of people off sides. What happens to private credit, private equity, kind of these other things that are not doing so hot already?
So let me give you the other part of the 1970s, since people are going to be looking at that chart of the first wave and then the second wave. The second wave had another part associated with it, which is not going to happen this time. And not in my opinion, this can't happen. If it does, we're in bigger trouble. The unemployment rate went up to 10% during that second wave. I don't believe that can happen. We still have a labor shortage, and we still have a tremendous amount of net worth in the country. So it is a very different situation, because back then, oil was such a bigger part of the economy. You're going to see that chart, so it made sense. It's a different world now. We're a digital economy. We have 20% of consumption in this country is healthcare, which does not change and has no cyclicality. And for everyone to realize, a lot of that is funded by the government. So when you've heard the term universal basic income, just remember, we have $5 trillion a year that is basically transfer payments to people. That includes Medicare, Medicaid. It means that the expenditures for healthcare, because we have a sick country, they're spending that much money. That's GDP. That's 20% of consumption now, of expenditures. Wealthy people are not going to change their spending habits dramatically. Yes, they'll pull back on some things, but to actually see the job losses, you actually need to see consumption drop off a cliff. When you add in the $1+ trillion that are happening in CapEx from AI, well, that's 3.5% of GDP. You add in the consumption, which maybe it'll fall. It's been growing at 4, maybe it grows at 2. You're still dealing with kind of 5% type numbers that are happening. There's going to be negatives in housing. There'll be negatives in commercial real estate. There'll be negatives in other things. And that part, little less consumption, little issues on commercial real estate, but more importantly, the liquidity trap that's happening in private credit will have an impact. So credit is not going to get better. The best case scenario for credit for me, the best case, is that we go through a 2000 to 2005 situation where spreads gradually widen out. It's not some kind of systemic issue. This was all during the dot-com bubble, but you had to get rid of this spending, this debt that was happening that shouldn't have happened. I think this is going to be a gradual credit spread rising, not a complete panic, but I do think they're going to have to intervene at some point in the private credit side. But that will happen when the insurance companies, and in particular annuities, are brought into the equation, which I think is a growing risk every day.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
There's a bull market in hardware. There's a bull market in commodities. When those things are in a bull market, scarcity is a tough thing to trade. Like shortages are not easy. They go up a lot and then they come down a lot. You have to have a little bit more comfort with the volatility as opposed to owning software names or owning the Mag 7 or whatever it is. I think people just need to get comfortable with, it's not a bear market, it's a bull market in some things. So when you say all-time highs, you're embedding two things. Is software going back to all-time highs? No. No, it's not. That's a structural change. It never should have been at the levels. Will financials go up? Is the private credit situation going to reverse and go back? No, it's not. Well, that's a big chunk of the market. Is Oracle, is Meta, no, they're not. So you have to remember that if the market only ends the year down 5, which I think is very possible, there'll be a lot of stocks that are up significantly. And rather than focus on the index, which is weighted to a world that no longer exists, that is disrupted by AI, you have to focus on this. Do I think the Brazilian market will be at all-time highs before the end of the year? Absolutely. But it's not off the all-time highs by that much. So that's the way I want people to think about it. Same thing with silver, same thing with other things like that. There's better things to ask the question rather than the S&P 500. I think that's just making a mistake.
Bitcoin?
That will be at all-time highs.
All-time highs by midterms.
Yes. In my opinion, Bitcoin will bottom first. It's already acting better. I mean, it's amazing that during this whole 4-week period,
crazy
4 weeks, it has sat every single day between 68,000 and 72 on a closing basis, except for like 3 days. It's insane that you've been able to sit there. Now,
why do you think that's happening? Just before you get to the price.
Well, first of all, I do think that there were a lot of trades that were short Bitcoin in general. So one of the things people have to do, like I was listening to some podcasts on the way over here, like, yeah, consumer staples are going down. That means something good's happening in the market. And I'm like, guys, you guys got to get used to this. When there's deleveraging, pair trades are coming off. Deleveraging by definition in the hedge fund world means, okay, I'm long gold, I'm short Bitcoin. I think a lot of people had that trade on. It was working great. Well, when they take that off, it leads to a bid in Bitcoin. The same thing that was killing it. The other thing is software has bottomed. Like it hasn't fallen yet. It's not rallying, but it's not falling. If software has found a level, which I kind of think it has, where it's very difficult for it to go down a lot. So now it just trades with the beta of the S&P. Well, that's good for Bitcoin. So I think that's the first thing that's happened. The second thing, and this is the point that I really do think people need to put in the context, I think we're in a world of liquidity. I think real-time liquidity is becoming very, very important to people. It's not just private credit that people are trapped in. Remember, they're trapped in private equity, like the endowments. They need liquidity. Liquidity is going to be a bigger story because part of the thing that I talk about is I believe the fiat assets have peaked. So the reason I don't think stocks are going back to all-time highs is because I think in 10 years, best case scenario, they're the same price they are now. That's in my mind what I believe because of AI. If that's the case, there's a gradual debasement. And what people have to be comfortable with is we always talk about debasement from a debt perspective. The debt of the US government at $40 trillion is small in comparison to the household net worth in the United States of $175 trillion. The global assets are $800 trillion. Most of that is illiquid. The liquid part, the stocks, the bonds, okay, they're both down this month. This will be the worst month for a 60-40 portfolio since 2022. That includes Liberation month last year. So that's because it didn't stay down that long. This will be a bad month for people in their portfolios. What are they going to do? What are they going to look to? Well, Bitcoin during the month is going to hang in there. And if all of a sudden you look back at the end of the year, and this is the reason why, I think there's going to be a flood of money into liquid items that are growth. And if you want to perform and you're a pension fund or an endowment, they need to make money. Like, I don't think people realize, and having been both at Morgan Stanley and then at a hedge fund where I talk to these investors, they have to meet their liabilities. This is not like, that's why the endowments needed to raise cash. They needed liquidity. So I think the liquidity part of the argument is becoming a story that is very, very important. And the same thing goes for hedge funds. If they're levered significantly and the correlations are shaking, they need to raise cash. They need more liquidity. So I just think there's a problem in the market that people don't realize how much liquidity is going to be in demand for the rest of this year. And that liquidity will lead to items that trade 24/7, that are liquid and have a growth component. So once the equity market finds a level where the multiples are just too cheap, which I think is going to come up within the next 10% of the S&P, I think Bitcoin will again be the fastest horse of the race. And I think at that point, it's going to bring a lot of new people into it. The growth asset story. And again, as someone who admits repeatedly on every interview I do, I did not expect Bitcoin to come back below 100,000, but I also did not expect the re-rating in software to go so violently, so fast because of AI progress. Stable coins traded record volume in January. I haven't seen the February numbers. I don't know if you have, but $11 trillion in the first month of the year off of 33 trillion means the agentic world is accelerating. So the network effects are going to happen. Ethereum is going to benefit from that. Bitcoin will benefit from it. So the most important thing to me is, what are the volumes doing in stable coins? That's my direct link to the AI agents. How much of the guardrails being used? Number two, Ethereum is an important gateway for all of the hedge fund people and all of the endowments and all that. And the reason is because it actually can be used in a discounted cash flow. You can actually attach something to it to convert Ethereum back into this. And if people haven't done the work, and I'm sure they have because of Circle to some degree, I am getting asked the question more and more from smart people because I think they're giving up on software. I think they're really getting tired of like, why am I trying to buy this if I don't know? Let me find something that's growing. Well, this area is growing. So I think Ethereum is a critical thing. You need to stay above 2,000. We break back below, Bitcoin will go back down towards 60. But I think this bottoming process is healthy from that perspective. And then the final part is, people still ask me the question, well, how does Bitcoin benefit? And I just say the same thing. Do you guys realize that the majority of people do not invest in individual securities with stories? Yes, they do. No, they don't. They're in SPY. There's no story for SPY. Bitcoin is SPY with inside the digital world. It always will be. So when people say store of value, I always sit there. I'm like, do you think a pension fund is ever going to go buy Solana? Do you think a pension fund is ever going to go buy any other altcoin that you want to name right now? Maybe down the road, but they barely got approval to get into Bitcoin. And if Bitcoin's working, they all can buy it at this point for a variety of reasons. And so I think you're going to see weightings in this go up. And if there's one really positive sign, having attended so many events, your events, the Digital Asset Summit this week, the community's not very optimistic from the retail side. From the entrepreneur side, there's a lot of buzz still going on.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.